Hello and welcome. I'm Rodrigo Diaz, Editorial Manager at Oxford Business Group Asia Pacific, and this is the OBG Talk in partnership with the ABS-CBN News Channel. Today we will discuss transport infrastructure in the Philippines, areas of improvement for both the public and private sector, and the role the country plays in regional flows of goods and services. With no direct land ties to any nation and a population spread over 1,000 islands, developing and maintaining an efficient marine transport network is crucial to every sector of the Philippine economy. Total cargo through output in the country has increased from 193.71 million tons in 2012 to 205.9 million tons in 2015, while container activity has likewise continued to expand. In recent years, continued population growth and growing demand for imported goods, along with increased industrial output and tourism visits, have pushed demand for port services progressively higher, to the point where some facilities are hard-pressed to keep up with this growing strain. In response to the accelerating trends, a multitude of port improvement projects are being rolled out to improve capacity and efficiency, and the government has committed to a number of short-term projects. And here to give his perspective in the transport sector in 2016 is Christian Gonzalez, Asia Pacific Head of the International Container Terminal Services Incorporated. Thank you, Christian, for joining us.
Good evening, Rodrigo.
I'd like to come to the question of priorities for the new administration when it comes to ports. Specifically, I would like to know your view in regards to priorities on secondary ports and the development drive of places such as Mindanao. If you had a chance to advise the new administration, what would be the three main steps that you would take in order to ease domestic trade channels within the Philippines?
I think ports per se are not necessarily the immediate issue being faced by the new government. I think if I had to find three things that I could advise them on, one would be certainly figuring out the traffic crisis that we're facing. Mm-hmm. And this is not just a Metro Manila thing. This is Metro Philippines, all the urban centers in the Philippines. The second would be to find a way to get the most capacity out of existing assets, runways, mm-hmm. roads leading in and out of ports, connections between certain industrial areas and the consumption centers of the country. And I think the third issue would really be to get projects that are currently hampered by right-of-way issues mm-hmm. and other bureaucratic delays sorted out. Mm-hmm. And I think really all three of these things would require extreme political will and strong support probably from Congress. I mean, there's been discussions on things like emergency powers and whatnot, and I think the time is right for this to occur.
We have discussed the challenges and infrastructure priority developments for the sector. Now let us turn to something that we all find very exciting. The demand side of the economy is looking very solid, and the Philippines for once has turned itself into one of the bright spots in Asia, outpacing even China in terms of GDP growth. How does this positive environment translate into expansion opportunities for your sector, and also what sort of growth rates are you anticipating for the moment, and how sustainable do you expect these developments to be?
The required growth rates for the type of economy we have, the population growth we have, is probably somewhere between 8 and 11%. If you look historically at the port sector, you would generally see container trade, which is what we specialize in, growing at 1.5 to 2 times GDP. Those days are over. It's come down to probably 0.71 times GDP. Mm-hmm. So if we achieve what the new administration wants to do and what's required by the economy, we would likely see 8 to 11% growth in the container trade. If we continue to chug along the way we've been doing in the last 6 years, mid sixes, high fives, low sevens, mm-hmm. then you'd expect to see that kind of growth in trade as well. Right. So in a worst case scenario, 6. In a best case scenario, 11 and beyond.
Now looking at the significance of ASEAN, at least on the surface, it has become easier to move goods within the region. However, still most private sector participants complain that the high burden of compliance in many cases outweighs the benefits of a liberalized tariff regime and of course friendlier regulations. In your opinion, what needs to be done in order to turn ASEAN into a more serious regional economic community?
Well, the reality is it's not just a problem with ASEAN integration. It's a problem that we face in this country. It's an endemic problem that we face in this country. Take customs processes, for example. I mean, how many signatures do you think you need to process one container coming in? How many signatures do we need to get an import permit? How many signatures do we need to I don't know, process something with the BIR? I don't know the specifics. All I know is that there's a lot of them. And I mean, if we want to match up with our fellow ASEAN members, and we want to make it easier for people to do business here, we need to do something as simple as reducing the number of people who need to put pen to paper.
How about the potential for cross-border cooperation to lower the cost of logistics? For instance, one example is sending goods from Sabah into Palawan. In most cases, you still have to go via Kuala Lumpur, Manila, which is of course incredibly inefficient. What do you think it will take for government to allow genuine intra-regional trade?
This is a good question, and you need to look at what other people have done historically here. It is not practical to go between Sabah and Palawan. From a port perspective. If the volume of trade between those two is, call it 5,000 containers a year, right? For each one of the places might be a big number. But to handle even one container ship, you need to build a breakwater, you need to dredge, you need to build a wharf that can handle it, you need to put rails, you need to put a crane. These kind of fixed assets, you know, these require a payback of significant amount of time and hundreds of millions of dollars of capital. That's not going to get paid back by 5,000 people. Right. If you see how the Americans handled this in the 50s, they had a massively impressive rail system. But rail systems are also capital intensive. They require a lot of upfront capital. Right. You can't start connecting tiny cities around the United States to the main east to west rail systems that they had. To a degree, you also couldn't build highways all over the place. I mean, they started building highways back then and freeways, right. but at the end of the day, all that concrete cost. And there were also environmental issues. So what did they do? They built airports. And the United States today has 14,000 plus airports. That I mean, compare that with the rest of the world. It's a huge number. Yeah. And that's how that economy for the little places in Montana, Idaho, Maine, that's how they got these started. So you can't just think of trade between two places that happen to be connected as the crow flies in the quickest manner by sea. In a port sense, you need to look at all the other modalities we have available to us, like air. Yeah. So where you have a tourism opportunity and a requirement for a small amount of cargo, you go air. And then if you really want to reduce the cost of shipping within the Philippines, you need to upgrade the domestic ports to handle the domestic fleet that we have. This is very different than the international fleet. Right. The international fleet is seeing ships getting upsized on an almost daily basis because there's a huge amount of investment in 18,000, 20,000, 23,000 TEU ships. So a lot of the other ships they used to use, 14,000, 11,000, 8,000, are cascading down into markets that traditionally use 2,000, 3,000 TEU ships, cascading into the international trade to these places. So we need to gear up our foreign ports to be able to handle those kind of ships. The domestic ports, the domestic markets can't afford that kind of infrastructure. Right. It doesn't make sense. Maybe they can afford it, but you won't make your money back. We may as well put our money into education and healthcare, to be perfectly honest, and roads. You know, something that benefits the common man. So in places like that, build an airport or a seaport that can handle the fleet that the domestic shipping lines are prepared to make available to our domestic trade.
Thanks, Chris. I have more questions for you after this break. OBG Talk will be right back. Welcome back to OBG Talk. Now, Chris, I would like to look specifically at the Philippines. It is an archipelagic nation. It is comprised of several thousand islands, and in order to succeed, it must be connected via air, road, and most importantly, sea routes. Most economic participants have complained about the level of underinvestment that the transport sector has faced, in spite of the Aquino administration's great attention on this regard. From your particular opinion, what can the government and private sector do in order to accelerate the process of improving port infrastructure across the nation?
You need to sort out the connectivity before people are actually going to put money into the ports.
Right.
Even if the government is willing to pour its own money into the ports, if the connectivity is poor, people aren't going to use it. So it's not really chicken or the egg, but rather do it together, right? If the government is willing to connect or to commit to connect certain key ports to the consumption centers of those particular islands, you will be able to get a lot of private interest in developing the port. On the other hand, if the government's willing to put money in the ports, you will also get private interest to operate these facilities and potentially invest also in the connectivity. So I think they need to look at both things, and airports are one thing, seaports are another, but the roads actually fit into both of those and are equally important when you speak of a port. And then you can throw in rail, of course, as well, right? Although you get a lot of short haul here, there is potential to still make some money on that if you combine freight and passenger, or if, for example, you're very interested in developing the airport in Clark. You could have something very similar to what they have with the Airport Express in Hong Kong.
Now, in regards to financing, it is notoriously difficult to obtain long-term funding, not only in the Philippines, but in ASEAN. What can heads of government do in order to underwrite risk and create more confidence amongst investors?
There's no real problem with liquidity in the Philippines. There's a lot of money. I think it's the tenor that's the problem. And again, it comes down to something I also said earlier about breakwaters and these kind of things. These things have almost 3-4 decade payback if you build really significant ones.
Right.
You're not going to get anybody in the private sector who can come in and get funding for a 30-year, 40-year payback. That's not going to happen. This is something the government needs to understand is their responsibility. And this is very common practice around the world. Now, when you start talking about equipment, and superstructure on a port footprint, the land-based side of the port, then I think with the necessary depth, channel deepening, channel dredging, breakwaters and things like that, the commercial viability comes up, and the banks, whether local or foreign, will come in and easily fund this with terms that are very agreeable to the commercial particulars of those particular ports.
Talking about the proposition of bringing foreign players to develop port infrastructure in the Philippines, although many investors would argue that despite its liberal economic environment, the Philippines still not serious enough in attracting foreign participation because of its limits on foreign equity. What role do you think international partners could have in regards to port development if these restrictions on equity were lifted?
Look, you already have 2 of the world's probably 5 top port operators operating in the Philippines.
Right.
So there's no shortage of expertise. You have a couple of private operators who have also done quite well themselves. But I mean, look, let's face it, ICTSI has over 30 projects around the world,
Right.
some yet to be operational, but very exciting, very game-changing, like our facility in Melbourne. This puts us on the map with, like I said, the top 5 operators around the world. Dubai Ports World is one of the biggest operators in the world, and their expertise is without comparison. I mean, so technically, you already have those skills here. What you do lose with limiting foreign ownership to 40% is liquidity. Access to capital. I mean, if more than 40% of our shareholders could be foreign, you would get a lot more market liquidity and a lot more access to capital for a company like ourselves. And that would be similar for other people who are trying to start up in this business.
Let us return to some of the domestic challenges for the sector. The government has launched an ambitious e-government program which aims to streamline bureaucracy, put all information and procedures online, and of course reduce systemic corruption. Despite the good intentions, many players still cite the hurdles of import and processing of imports and exports, which of course directly impacts your sector. In what ways do you think the Philippines could improve its customs framework and also facilitate trade and the transport network?
Right now, the environment we have before going into another administration is one where customs is trying to get involved in things they shouldn't be getting involved in. Matters of port operations per se, or more technical aspects of how a port operates, as opposed to trade facilitation and tariff management, and reducing the bureaucracy. That's what they should be focusing on.
Right.
You reduce the bureaucracy, you reduce the amount of signatures, you reduce the amount of face time that someone has to have, the amount of human contact. And throughout history, the only way that's been proven to reduce processing times and corruption, which is something that's important for all of us, this government and the next as well, is to take away human contact.
Digitize.
So they should focus on simple things like this. Yeah. Do I need 20 people to sign, or do I need 10? Do the 20 people signing now, is that because we've looked at things the way we've looked at them for 30 years? Probably. Is there also a case of all these investments in computerization that have brought in automation that's just actually sat on top of an existing manual process? If you're going to automate, you need to take away the manual process. You need to take away the interaction again that people have with one another. That's what they should be focused on. Yeah. Not midnight deals or anything else like that.
Eliminating the bureaucracy aspect and streamlining processes. To an earlier question, you referred to the support infrastructure in place that would be needed, to facilitate the flow of trade. Looking again at the priorities, even in regards to the incoming administration, him coming from Mindanao, the role that inter-island shipping costs have always been a concern when it comes to the Philippines. The lack of a cohesive inter-island port development plan. In terms of port priorities, what would those look like, and what places should be highlighted when it comes to investment into that area?
The new government is really spot on with their plans of really focusing a lot of the infrastructure spending on more regional consumption centers, as opposed to having all that money. It's easy to say we're going to spend 5% or 7% of GDP on infrastructure. It's another thing to really commit to putting that 5 to 7 or 8% of GDP into places that historically have not been where the money goes. So I think they're spot on with that, and if we really pay attention to what these consumption centers are, and we choose, the new government chooses them wisely, whether it be Davao, Cagayan de Oro, General Santos, Zamboanga, wherever. I think you will see these investments catalyzing further investments by the private sector in places like ports and airports. And you will then see more efficient servicing of the domestic fleet, which will then bring the cost down.
Even looking, within the PPP framework, a project that was consistently highlighted was the redevelopment of the Sasa port in Mindanao. Using that as an accelerator for some investment or developments when it comes to port infrastructure, and what role would Sasa play in the future? Or I don't know, to what extent would that particular project have a potential for unlocking the trade proposition of Mindanao?
Again, Mindanao is very, very big. And unless you have the connectivity, whether it be road or rail, you can't necessarily pinpoint one specific place right now that can actually unlock all this value for Mindanao as a whole. Right. So you really need to look at the individual consumption centers. Going back to Davao specifically, you've had a lot of private port development there already. So is Sasa, does Sasa require 18 billion pesos like was previously suggested? Probably not. I think they need to carefully look at the supply and demand, and also see how many operators there already are there. before determining how to move forward. Do we need to keep developing these kind of ports in these kind of cities? Absolutely. To what magnitude and to serve what market? I mean, those are the questions we have to ask, because at the end of the day, you want these projects to be profitable.
Right. Now, going back to the need for a cohesive plan when it comes to port development nationwide that takes trade into account and I guess the dynamics of the economies in these particular localities. And lastly, just looking at the administration, the archipelagic nature of the country, the second longest coastline in the world, and what are some of the your outlook in regards to the future of the transport sector in the Philippines, and what role will the new administration play?
I think everything I've heard so far from the new administration is great. As I've said, you need to look at the support infrastructure for this coastal trade that we're talking about as something that isn't just the seaport, but also the connectivity to the seaport and the bureaucracy that surrounds the seaport.
Right.
So they need to give both DPWH and DOTC, and through DOTC the PPA, the mandate to really get this connectivity and bureaucracy reduced, in partnership, of course, with the Department of Finance that runs BIR and Bureau of Customs. But really, as I said, I'm hearing great things, and I think the political will is really there to sort out these traffic issues and these access issues to the ports and things like that. If you do that, when they do that, the development and the efficiency will follow. You really unlock a lot of capacity that actually most people don't know we have already in some of these places.
Even looking at the conversation 2 years ago when the truck ban was in place, congestion in the Port of Manila, mostly due to support infrastructure that was inadequate, and the value proposition of alternative ports. There was an executive order signed declaring both Batangas and Subic as extensions to the Port of Manila. The viability of this plan, and to what extent did it fulfill the promise that it had in regards to decongestion, or whether there are factors that make them not viable to receive that sort of cargo?
Those ports are certainly viable, but they're not as big as MICT and South Harbor. Is there further development that we can do in a place like Subic, for example? Absolutely. I think Subic is great. You have a connection to Clark, which gives you an inland container option, which then allows you to distribute via smaller scale logistics channels. You're seeing cargo move there already, but again, you've got to get the bureaucracy and the connectivity sorted out. You cannot have trucks going through 2 or 3 toll lanes in a span of 1 kilometer. You can't have trucks having to queue all this time at a toll plaza because they have to pay 10 pesos. This can be collected somewhere else or included in some other tariff that's paid electronically, for example. So there's still a lot more to do. And I think really, if you go back to Manila, a lot of that problem has been solved, because when I spoke on ANC quite some time ago during the truck ban, I had said one of the short-term things to do is unlock the capacity of the roads, which were limited because there was no discipline. The appointment system has brought in discipline. The Duterte administration will definitely bring in more discipline. So you'll get a lot more free flow of trade. But needless to say, that should not stop you from looking at key northern corridors that aren't hampered by informal settlers, by a lack of connecting infrastructure, that don't have constrained inland facilities. I think looking at Subic, the ability to combine that with a logistic zone in Clark that has land and air, and of course that sea connection, the potential is phenomenal.
Fantastic. Thank you, Chris Gonzalez of ICTSI. And that is today's OBG Talk in partnership with the ABS-CBN News Channel. I'm Rodrigo Diaz, and thank you for watching.